The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Happy Tuesday, March 12th to you all. Phone number to use, same as it always is, toll-free, 877-927-6648. You can catch my show every day on TFNN from 3 to 4 Eastern. Also available as a podcast on iTunes if you can't listen live. And another great way to listen to the programming is with your smartphone. All you have to do is open your smartphone browser, type in tfnn.mobi, and very easy. It'll start streaming right on your phone. Plug those earbuds in. Out and about. Great way to listen to the show. And don't forget about Tiger TV on the homepage of TFNN.com. Channel 1, the show is carried live. It is archived on Channel 13. And with Tiger TV, not only do you get the show audio, but you can also look at charts live right along with me. Speaking of charts, let's take a look at the NASDAQ composite. We'll see tech stocks under some pressure today. And let me just do a refresh on the NASDAQ composite chart here. We'll see the tech index trading in the bottom half of its range. It's been a nice run for the NASDAQ and for the major averages, for that matter, over the past 10 trading sessions or so. NASDAQ composite down 16 points, 0.5% to 32.37. Right now, volume on both exchanges tracking very close to what we saw yesterday, actually a little bit higher. So it is possible we could see some mild distribution in the market today if things stay right, where they are right now. NASDAQ volume tracking about 3 to 4% higher than Monday's level. NYSE volume, same deal, tracking about 3 to 4% higher. On Monday, 1.6 billion shares traded on the NASDAQ. Volume on the New York Stock Exchange, pretty light at 595 million. So that's a look at the NASDAQ composite. Even if we do get distribution today, higher volume decline, mild institutional selling, the distribution in the market has been virtually non-existent for some time now. So the major average is really not flashing anything in the way of sell signals here, even if we do get some distribution today. Now, if you do start to see these higher volume declines increase in frequency, start to see more and more wishy-washy price action, if you will, in some of the market-leading stocks out there, that's reason to get defensive. But one, higher volume decline is not going to kill this rally. The tricky thing is you've got indices breaking out to new highs. The Dow takes out its October 2007 high. S&P 500 isn't quite there yet. NASDAQ still has a ways to go. But you've got the market breaking out here, and you've got extended stocks getting even more extended. So it's not like it's exactly an easy environment to make money in stocks right now, because if you're looking for stocks breaking out of bases, breaking out of consolidation phases, they're really not out there. What you are seeing are stocks pulling back to their 10-week moving average, which is a reasonable time to enter a stock. But as I mentioned in my letter this morning, it is, support at the 10-week average is a compelling technical action, and it's also, you can buy there, but you just want to start with a slightly smaller position. So that's a look at the NASDAQ composite. Checking in on the S&P 500, we'll see the benchmark index trading near its session low, down almost 6 points to 1550. You can see S&P 500 working on, what is that, 7 up days in a row, so its winning streak in jeopardy today, and the same can be said for the Dow. Headed into today, it was up for 7 straight sessions, and it is trading in a fairly tight range today, but down about 14 points, 0.1% to 14,433. So that is where we're at in this market. Not exactly an easy market to navigate right here. With the market in an uptrend, yeah, you do want to be looking for stocks to buy, but the market landscape overall is really not presenting stocks on a silver platter like it was back on January 2nd, where you had that NASDAQ gap up in price on January 2nd. You had a lot of stocks breaking out around that time. Much different environment here because stocks have been running higher for some time. So you've got, the rule is just scads of extended stocks out there, and the exception is stocks still within buying range. So tricky out there. No need to force the issue. If you've got money to put to work, I'd almost think it's better just to wait. And yeah, it's possible the market could continue higher from here. But I got to tell you, my feeling is with the number of extended stocks out there, I'm just not sure how much more this market can go without consolidating, pausing, catching its breath. That's going to allow a lot of stocks out there to do the same: pause, digest gains, catch their breath, and then after a little consolidation, the uptrend could easily resume. Taking a look at some story stocks today, let's take a look at U.S. Silica Holdings. They make commercial silica used in fracking in the oil and gas sector. Silica under a lot of pressure today, down 8.3%. to 24.32. This was a stock that was very extended in price going into today, so not surprised to see it pull back here. The other thing to keep in mind is that they announced a secondary offering late Monday, 8.5 million shares, and anytime a fast-growing growth name like this announces a secondary offering, it tends to weigh on shares, but U.S. Silica Holdings extended after a recent breakout over 2150 under quite a bit of pressure today in heavy volume. This is a stock that needs to form a base. It most likely is starting that process today. Outstanding fundamentals at U.S. Silica. Would love to see how this base takes shape, because it is a stock that's got a lot of qualities I like to see in a stock. Big earnings and sales growth in recent quarters, and a product that is likely going to continue to see strong demand going forward. One reason why the NASDAQ composite is underperforming today, tech stocks under pressure in general. Apple taking another hit here. Apple recently took out a low of 435. That brings a new low of 419 into play. Shares of Apple trading right now $430.80, down a little more than $7 on the day, 1.6% decline. News here is that Jefferies cut its price target to 420 from 500 due to the potential slower sales growth in the first quarter. Also, don't forget the Samsung Galaxy S4 is going to launch on Thursday, and the talk continues about how much market value Apple has lost since September, October last year, and really this is just a story of deteriorating fundamentals. The market realizing that Apple is not going to be able to maintain the growth rate that investors are used to. It's always sold at historically a very cheap multiple, but that multiple continues to get cheaper. Apple, a lot of challenges ahead for this company. Shares of Red Hat, RHAT, or is it RHT? Yeah, it's RHT, I believe. There it is. Shares of Red Hat under some pressure after Citigroup cut the software maker to neutral from buying, saying the company is lacking a major source of new revenue growth. So shares of Red Hat have been under pressure, rallied nicely from the beginning of the year up until late January, early February, but then it corrected from about $57 a share down to 49, rallied back to this area here, but you can see the 50-day and 200-day moving average kind of converging here, and that so far has been a pretty stiff resistance level for Red Hat. Shares down 4.3% today in very heavy volume to 50.83. Also, Yum Brands, YUM. Yum Brands, of course, they're the parent company of Taco Bell, KFC, and Pizza Hut. Stock was up nicely early, hit an intraday high of 71.50, has fallen way off its highs here, actually trading near its session low. 68.78 is the last price, up 1.4% on the day, but clearly sellers in the stock today. The company said same-store sales in China fell about 20% in the first quarter. That is not good on the surface, but it was much better than the company's prior guidance of a 25% decline. So same-store sales in the quarter at KFC stores, Kentucky Fried Chicken stores in China, fell about 24%, but same-store sales at Pizza Hut fell 2% in the quarter. About 42% of Yum's operating profit in 2012 came from China. So that is one reason why the stock has been under quite a bit of selling pressure of late, just concerns about growth in China. Checking in on shares of Facebook. We'll see how that 50-day moving average is playing out here. Looks like initial resistance here. Facebook found resistance at its 50-day moving average earlier this month. You can see that if you're watching in Tiger TV, found resistance. This was actually back in mid-February, right here, has tried to rally back in recent days, and once again is meeting with some resistance here. So definitely looking like a tired stock, and the longer a stock stays underneath its 50-day moving average, the more likely it is that lower prices could lie ahead. So keep an eye on Facebook here. It's possible it could start to form the right side of a base and maybe see some renewed signs of institutional buying, but the broad market is going to have to show renewed signs of institutional buying as well. And to me, major averages, like I said at the top of the show, are starting to look a little bit tired, so I wouldn't be surprised to see some selling pressure here in the broad market. Don't normally talk about Zynga too much, but the stock was up big yesterday, up a 10% move for Zynga yesterday. The stock is down a little more than 4% today to $3.77. There was a rumor circulating on Monday that Yahoo might be interested in acquiring the social media gaming company, but Macquarie Research came out with a note today basically saying the rumors are unfounded. So sellers back in Zynga today after a bullish day for the stock yesterday. Checking in on the U.S. dollar index. Let me just pull up a chart here for the dollar. Let's see what we got here. U.S. dollar index closed Monday at 82.57. It is down just a little bit today. Let's see, trading at 82.61, up just a little bit, less than 0.1%. So not much movement in the U.S. dollar index today, up slightly, about 3 ticks or so. April gold up $13.70. That's about a 2-week high for the front month contract. 0.9% gain, settles at $15.91.70 an ounce. When we come back, we'll check in on crude oil, some earnings reports in the oil and gas sector. We'll do that when we come back. Thanks very much for tuning in to Breakout Investing. Ken Shreve with you. We will be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results. Understand Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Checking in on crude oil. April crude extended its winning streak to 4 sessions, I believe. Finished at $92.54 a barrel, up 48 cents. Taking a look at the USO, United States Oil Fund, which basically tracks the price of West Texas Intermediate light sweet crude oil, hit an intraday high today of 33.60, down near its low at 33.26, but still up about 0.7%. You can see the USO here. Not real clear to me that oil prices are ready to start a meaningful run higher, and with the USO still trying to get back above its 200-day moving average and 50-day moving average. Both of these former support levels could be resistance for now. I talk a lot about that on the show, but it is true anytime a stock or ETF or index, for that matter, is underneath a former support level, sometimes that support level turns into resistance. So resistance right now for the USO is just over 34. It's trading right now at 33.26. In the oil and gas space, let's take a look at CVR Energy. That's ticker CVI. Big earnings growth at this company. Earnings up 253% from a year ago to $1.20 a share. The estimate was for earnings of 89 cents. Sales up 77% to $1.88 billion. That was nicely above expectations as well. CVR Energy has been a monster performer basically since November, when it was trading around $35 a share, all the way up to, again, 59, 58 right now. But very, very extended, tough stock to buy up here. If you buy it, you'd be chasing. But nice results from CVR Energy, and this is a company, they spun off part of their refining business. And the company that was formed as a result is called CVR Refining. That is ticker CVRR. So let's check in on CVRR because they reported earnings as well. Try to make this not too confusing, but CVR Energy, CVI, still owns about a little more than about 85%, I think, of CVR Refining. CVR Refining came public in January at $25 a share. It has been a very nice performer here, and you actually do have a nice little breakout for the recent new issue today. 32, looks like 32.25 is the swing point here. A couple of swing points. I mean, it gapped up today, broke out over a recent high of 31.92 right here, and it still has its all-time high of 32.25, which is all the way back over here to contend with. But looks to me like a technical breakout, gap up in price, good volume, and the numbers here at CVR Refining, they made 37 cents a share. That was down 29% from a year ago. Sales were up 85% to just over 1.8 billion, and so nice technical breakout for CVR Refining. Another refiner here under some pressure today on news of a secondary offering. Delek, DK, another extended stock out here after a breakout earlier in the year. That's when these refiners really started to move. But Delek had a nice heavy volume breakout January 9th, January 10th, right in this area here. And, this is too short a consolidation to be considered a valid base. So it's just an extended stock, needs to consolidate gains. Delek hits a low today of 37.33, but has done a nice job of fighting its way back. Shares were last trading at 40.04, down about 1.1% on the day, but well off session lows. Stock was down early again on news of a secondary. Bond yields lower today. Bond yields have been in rally mode for several sessions in a row. 10-year note down today to 2.02%. 30-year bond at 3.22%. Economic data is going to start to pick up starting tomorrow. We'll keep an eye on retail sales for February. Look for overall sales to be up 0.5%. With the excluding autos also up 0.5%. On Thursday, we'll get the latest look at the producer price index. That is the latest rating on wholesale prices. And then Friday, consumer price index, Michigan sentiment for March, and also the Empire Manufacturing Index from the New York Fed. Pretty quiet in terms of our earnings this week. Quietest week yet. It was busy up until last week, but we'll check in on Casey's stores here. Came down to its 50-day moving average, is back up in the top half of its trading range, still down about 2.5% to 55.97. Earnings down 7% from a year ago to 40 cents a share. That missed views by 7 cents. Sales up 5% to 1.66 billion, also below expectations. But stock is trying to rally back. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Check in on the markets here. Trying to make a little comeback. About 25 minutes left to go in Tuesday's session. Dow pretty much flat on the day, only down a couple of points now to 14,445. Tech stocks still lagging. NASDAQ down a little more than 11 points to 3242. S&P 500 down 4 points to 1552. Mentioned shares of Apple weighing on tech stocks, and we did not mention Google underperforming today as well, down 1% to 826.31. Really not showing anything in the way of sell signals yet. This one is allowed to go down a little bit. It's made such a massive move since its breakout in January. Let's just take a look and see where Google is in relation to its 10-day, 20-day, and 50-day moving averages. Yeah, you can see it's pulled back. It's right just above its 10-day moving average right now. The 10-day is at 822, the 20-day is at 807, and then the 50-day all the way down at 767 thereabouts. So hard to believe a pullback to the 50-day moving average for Google would be what, a 50 plus point drop for the stock. But again, after a recent breakout, it's entirely normal for a stock to pull back to its 50-day moving average. So we'll see if that ultimately is the case, and see if that happens to Google. So tech stocks are continuing to lag. When it comes to the general market, again, it seems like a market that is now wedging a little bit higher with the number of extended stocks out there, with my growth screens virtually empty with actionable buying opportunities. I'm really not in a rush to put new money to work here. Some of the recent new buys really have been treading water. They really haven't been going anywhere. And if the market were really that healthy, I would expect some of these names to be moving. And they're not, so you have to pay attention to that as well. Back to earnings. Let's take a look at Urban Outfitters. Actually, one of my favorite retailers out there. Just love the growth prospects here. A company that is is turning itself around. Urban Outfitters has done a nice job of recovering earlier losses. It is now turned positive, up near its session high, up about 0.75% to 41.81, trying to get back above its 50-day moving average. Earnings at Urban were up more than double, up 107% from a year ago to 56 cents a share. That was a penny below expectations, and that is why the stock hit an intraday low of 40.25. But again, it has done a good job of coming back today. Sales were up 17% from a year ago to $856.8 million. That was about 8 million, a little more than 8 million above the consensus estimate. There are a lot of different stores underneath the Urban Outfitters umbrella, so sales by the flagship Urban Outfitters stores up 16.5% to 415 million. So a little more than 50% of its sales come from the flagship Urban Outfitters store. Anthropologie is another store under its umbrella. Sales there up 12% to 335 million. And Free People, fastest growing, but only did about 97 million in revenue in the quarter. That was still up 40% from a year ago. Apparently the market listened, because when the results came out, Oppenheimer came out with a note. They maintained their outperform rating and also said shares of Urban should be bought on any weakness. So it looks like the market listened. Again, after hitting an intraday low of 40.25, shares of Urban now up 31 cents to 41.81, trading slightly above its 50-day moving average. Mentioned retail sales coming out tomorrow for February. Let's check in on shares of Costco here. Again, this is kind of suspicious action. A market that's hitting new highs. Breakouts like this that are failing, and which is what's happening with Costco today. You got to pay attention to this type of price action. To me, the risk is starting to outweigh the reward a little bit in this market. So Costco up 1.4% today to 103.86. It hit an intraday high of 105.52. So if you're looking at the chart in Tiger TV, you can see the stock is trading near its low after early strength. Numbers at Costco, I mean, this is just one of the best run retailers out there. One of the best performing retail names. Earnings were up 38% to $1.24 a share. That was well above the consensus estimate for $1.06. Sales up 8% to $24.87 billion, mostly in line, maybe a little bit below expectations. Membership fees at Costco rose 12% to $528 million. In the U.S., same-store sales up 5%. Internationally, up 6%, excluding gasoline. Sales in the U.S. rose 5%. International up 4%. Check in on a small cap aerospace stock too, LMIA. I know this is a stock that you probably have not heard of, but let's take a look. As the group itself isn't doing too badly here. LMI Aerospace hit a high of 22.61. It has reversed and is near its session low here. Gives up its 50-day moving average, down almost 7% to 21.08. This is a company that provides design engineering services. They also apply or supply structural assemblies, kits, and components to the aerospace and defense markets. Thinly traded, micro-cap stock, but decent technicals going into today. Nice bounce off the 50-day moving average, but big sellers in the stock today. Earnings up 9% to 38 cents a share, 2 cents below estimates. Sales up 11% to 71.9, also slightly below estimates. Probably the highest quality stock in this industry group, you'd have to say, would be BE Aerospace. Kind of a tale of two different charts here. Same industry group, BE Aerospace makes cabin interior products for commercial aircraft and business jets. Much more liquid name in the group. And you can see BE Aerospace up for 7 straight sessions, outperforming again, up 1.3% to 57.77. Let's take a look at a weekly chart for BE Aerospace. Remember, at the top of the show, I was talking about support at the 10-week moving average. Well, the technical breakout for BE Aerospace was in late November last year. It cleared a swing point of 46.18, and then it just broke out. Came down to its 10-week moving average recently and enjoyed a nice bounce. So some people probably bought it on that bounce, and if they did, they'd be looking pretty good right now. So. Successful test of the 10-week moving average for BE Aerospace. Same industry group as LMI Aerospace. BE much more liquid, more institutional quality, and you can see its chart a whole lot better than LMI Aerospace. Earnings reports coming up next week. We'll touch on some names that we mentioned yesterday. Adobe Systems continuing to show relative price strength in the market. Nice little test of the 50-day moving average earlier this month for Adobe. They're going to be coming out March 19th, actually 1 week from today. Stock remains under accumulation. Mentioned kind of so-so lukewarm fundamentals. The earnings and sales growth really doesn't do it for me. When I buy a stock, you like to see bullish chart, but you also like to see strong growth as well. Fast-growing retailer Francesca's also reports 1 week from today. It's a little women's boutique, but again, you can see resistance here at the 50-day moving average. This one is looking vulnerable ahead of earnings. Looks like additional resistance at its 200-day moving average, just over 28. So another strong quarter of growth is expected at Francesca's. We'll see if the company can deliver. Now, Francesca's is, on the speculative side, it is a small cap stock, market cap of 1.2 billion. Fairly liquid, though. Average daily volume close to 900,000 shares, and really nice earnings and sales growth in recent quarters, and pretty bright growth prospects. But kind of a tricky market right now, and with the way the stock is looking technically, which is not that healthy, frankly. We'll see what they have to say 1 week from today. And these mortgage servicers, not that long ago, I was keen on this group. Basically, 3 names: Walter Investment Management. They also report 1 week from today. They're the last mortgage servicer to report. We heard from Ocwen Financial and NationStar Mortgage Holdings in recent weeks. Walter Investment Management breaks below its 50-day moving average today. Looks like volume is pretty heavy. Stock is down 3.8% to 45.21. Looks like this one is ready to consolidate. Ocwen Financial, OCN. It is still holding above its 50-day moving average, but the stock has reversed today off its high near its session low, down 7 cents to 40.39. And NationStar Mortgage Holdings. The numbers here were very, very strong. Still holding up here, holding above its 50-day moving average, so not acting poorly by any means, still holding support here. But we'll see what Walter Investment Management has to say next week on Tuesday, March 19th. A day later, Wednesday, March 20th, shares of FedEx. These transports have just been going absolutely bonkers. FedEx yesterday reversed off its high. It is trading near its session low again today, down close to 1% to 106.45. This is another reason to be a little wary of this market. When you look at the IYT, it's just the move it's made since December of last year when it initially broke out over 92. It's been such an incredible move. I just have to wonder how much more does it really have left. Normally, after a move like this, it's entirely normal to see a 4 or 5 week consolidation, if not longer. And it could be, the last consolidation IYT had was for 7-8 days, back here in February and early March. So it is down 3 out of the past 5 sessions, only down 40 cents today to 109.39. But we'll see if that IYT is ready to consolidate gains here. Also next week we're going to hear from Oracle, ORCL, another name that's been holding gains nicely, but with tech stocks under pressure. You see Oracle is under some pressure as well today, down 1.4% to 35.39. And then next week on Thursday, Lululemon. I've been pretty vocal about this stock. I just don't. This one looks long in the tooth. Has been, meeting with some resistance here at the 50-day moving average, underperforming again today, down 0.9% to 68.84. We'll hear from Lulu March 21st, which will be next Thursday. Another strong quarter of growth is expected, but these high multiple stocks like this are vulnerable in a market that, again, starting to look to me like it. Starting to get a little bit tired. Checking in on the markets here, Dow still down slightly, down 4 points to 14,443. NASDAQ Composite down almost 11 points to 3241. S&P 500 down a little more than 4 points to 1551.94. Wanted to show you a chart of MasterCard because MasterCard at last check was under some pressure today. Still holding above its 50-day moving average, but MasterCard down $6.24, 1.2% to $524.65. And let's check on a weekly chart here for MasterCard. This is one where at first glance it looks like a decent base that is taking shape here. Here's MasterCard. Okay, and I've taken this blue line, and what you have here is a flat base that has been forming for about 8 or 9 weeks. Normally, you want to pay attention when a stock is forming a flat base. This is exactly what a consolidation, a healthy consolidation, looks like. But this is also a late-stage base. I'm just going to go out on a limb here and say that the chances for another upside breakout here are not very good. If it happens, and it's possible it still could, I just don't know how much staying power it's going to have because this is a classic late-stage base. You can see the number of consolidations this stock has had on the way up, and notice how the low of each consolidation held above the low of each prior consolidation. That is how a late-stage base forms. So what's forming here looks to me like a 4th, 5th stage base. When you get these late-stage bases, that is, lends credence to the or lends credibility to the argument that the big money has possibly already been made. So not too many bases are forming in this market right now, and the ones that are, you got to be careful that they're not late stage. So MasterCard forming a flat base, not doing anything wrong technically. Stock is underperforming today. And if it does try to break out, I'd be very suspicious of the breakout. Headed into the final break, folks. Put the finishing touches on today's show. When we come back, stick with me.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
The Dow trying to extend its winning streak to 8 sessions in a row today. Right now it is down almost 10 points to 14,437. So it's going to have to rally a little bit during the last 5 minutes of trading. S&P 500. We'll see that it is still trading in the bottom half of its range, down about 4.5 points to 1551, and the NASDAQ Composite lagging today, but not selling isn't too bad, down 11.5 points, only about a 0.4% decline to 3241. Biotech stocks continue to work nicely here. Here's a look at the iShares Biotech ETF. Sort of reminds me of the major averages here a little bit. You had a nice breakout for IBB over 148. And during the initial stages of the breakout, there was some good volume behind the move for IBB. And breakout happened back in late February, early March, but you can see the accumulation down here looking pretty good. But over the past 3 sessions, volume really is starting to quiet down here. So it's not looking likely that it's going to be able to continue this uptrend, especially if volume continues to thin and dry up as it makes new highs. New highs, wedging higher in light volume has never been a good thing for stocks or the indices, and that looks like what IBB is doing right now. That said, some of the top holdings in this fund, Gilead Sciences has been a monster performer, but another example of what an extended stock looks like here. Just have no business buying it up at its current level at 46.19. Other top holdings, Regeneron, REGN. Now, this is a former leader that is starting to look a little tired as well, making lower highs here, as you can see. Starting to have some troubles around its 50-day moving average. Stock has recovered today after hitting an intraday low of 168.52. It's only up 36 cents, though, to 172.11. Not clear to me that it's going to be able to regain this 50-day moving average. Elsewhere in biotech, Celgene continues to be one of the shining stars in the market. Nice little breakout right in this area here. Very extended in price. You can see up several days in a row. Don't want to touch this one either. And let's check in on Biogen IDEX. Still waiting to hear from the FDA regarding approval of its oral MS treatment, a pill called BG12. Very favorable trial results for this drug, so expectations are high that the drug will be approved by the FDA, but you have to wonder, after a huge move for the stock, $142 stock, $140 stock back in January. It's now $176. You'd think maybe a lot of good news regarding the approval of this drug may be already priced in. So even though biotech continues to be a pocket of strength in the market, it is a group that's tough to find buying opportunities. Again, that is the theme right now. If you've got money to put to work, it's not exactly easy putting that money to work. So I think it's best to be patient, wait for a little pullback here, and go from there. But that is a better option than chasing stocks in the biotech area or a lot of other sectors that are very extended right now. So really not much at all in terms of earnings after the close. Nothing tomorrow before the open. Wednesday after the close, we're going to hear from Vera Bradley and Men's Warehouse in the retail sector, but very, very quiet week in terms of earnings. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, 3 o'clock Eastern, another edition of Breakout Investing. Have a great afternoon, everyone.